Hey, what's going on? It's Lewis here with Crypto Elite. Today's date is Monday, April 18th, 2022. And I don't know if what you're experiencing right now in these markets, but what I've been experiencing over the last few months has been absolute garbage. The price action to me has been like cancerous. It has been the worst possible thing ever. From here to here, made so much money. It was awesome. From here to here, gave all of it back. Absolutely terrible. And so I'm definitely going to have a cap if I make a certain amount of money to stop trading, because I can't believe that this entire crap happened. So if you are struggling right now, I want to tell you, you're not alone. But I also want to tell you one other thing, which is this. Okay? I don't know if you can see this, but it says, got it under control. I got it under control, okay? You got to have it under control. That's important. You got to have it under control. And you got to hodl, all right? You got to hodl. All right, you don't have to hodl, but you have to have a game plan. That's what you need to have. You need to have a game plan. And so in this market update, I'm going to demonstrate my game plan. I had a game plan. My game plan was to buy around 44K right up in right around here, and then more at 42K right here. Did that, was looking okay, and then we got this terrible price action. And now actually right now, literally right now, we do have this wick, and if we pull up the RSI and stochastic RSI and the MACD, everything's looking real good on the daily. So who knows? Maybe this is the bottom. Honestly, it probably is the bottom, considering that I just got stopped out on a couple of my trades, and the market does like to be an asshole sometimes, you know? So we're going to have to see how this plays out, you know? But this is like a classic BART manipulative spike down, right, and then right back up. So you can't really do too much about that. I did have my stop loss timeouts in, but they still had the price underneath the key levels for 12 hours. So it doesn't even matter if you have stop loss timeouts in. So it's very, very, very difficult to trade this. And so like I mentioned, if you're struggling, if you're having trouble, you're not alone. Probably a really good thing to do is to just sit out of the markets for the most part, dollar cost average into projects that you that you believe in. And that does bring me to one thing that I am starting to do now, which is I'm going to be making videos that are research-based videos, more fundamental-based, where I'm going to be going over different coins, their fundamentals, their technicals, their tokenomics, market cap, volume, exchanges, distribution, token allocation, and pretty much everything that everything that is involved with the token. So that will be very, very cool. It's a project I'm working on. I'm also working on different strategies, because clearly the strategies that I have been using have not been working in this ranging environment. And you could tell that this is a ranging environment because look, it's like, is this an uptrend or is this a downtrend? It's neither. You would argue that this is an uptrend, right? Because of what? The higher lows, consistently higher lows, right? But now, okay, now we have this. So even if you do this, it's very, very iffy. It's very, very iffy. And so yeah, we're gonna have to see what happens. But that's the point of me doing these market updates. So what I'm gonna do in this market update, same thing I do in all my other market updates. It's gonna go over bull market index, pi cycle indicator. Well, you don't really go over that. MVR VZ score, all of these fundamental things. So I think the best thing to do is just go right into it, because I did make an update video last week, and yeah, just noticed I did not post it online like an idiot. So I'm 100,000% going to be posting this. I have my coffee. I have an Adderall, and I have basically all day and all night. I don't think I'm gonna leave this seat. I'm gonna try not to leave this seat. So hopefully, hopefully we could do it. In fact, maybe I should even I wish I could try to live stream this, but it is what it is. So I'm going to open up all of these things. We're going to look at the fundamental stuff. We're going to see if it's time to get in, time to get out, all this other, stuff to help really create a game plan, because that, like I mentioned, that's what's important, is having a game plan. And then we're going to formulate one. So strap in. Let's go to the intro, and then let's start this market update. All right, so now we're going to go into the fundamental on-chain, I guess you could say, or just like, not really on-chain, but the fundamental analysis of cryptocurrencies, of Bitcoin specifically, and, the crypto market. And what I always start out with is the Crypto Bitcoin Bull Run Index, which is an index that utilizes advanced real-time analysis of 10 metrics to help you understand what stage of the Bitcoin bull run and bear market cycles that we are in. So this is a 34 right now, and if we scroll down, you could see that it takes into account the Pi cycle top indicator, the R hodl ratio, 2-year moving average, Bitcoin low trend line, risk reserve, MVRV score, and a whole bunch of other things. And this is the CBBI historical chart. You can see that it is currently, at the level where it is, which is around 34. And if it comes down to underneath 10, that usually signifies a very, very, very good buying opportunity. So I have this right here, which says 95% and higher equals exit all markets. 20% and lower is buy Bitcoin. Under 15%, buy everything and hodl. Well, it is, at 34. It's not at 20 yet. I like 20. It used to be 10, but right now I have it at 20 because I like how this 26 area, 25 area, even down here, 24, 23, this whole area is, quite substantial in my opinion when it comes to the CBBI. So if it does come down to the 20, that's when I'm going to be like, okay, I'm going to be buying a lot of Bitcoin down in this level. And right now, at 34, you can't really say too much about it because, well, you just have to wait. These type of indicators that I look at here, it's really yes or no. They're either in the zones or they're out of the zones. So this is the CBBI, so we just got to wait on this one. Then we go into the Pi cycle top indicator, and for this one, obviously, it's a cycle top indicator. So it's an indication of the top. So we're obviously nowhere near the top, and so we can't really use it. But I just like to always have it on here, just in case. Then we have the MVRVZ score. I do like this one. It has very obvious lines, green, red, or green, pink, and red. And so once it comes into the green, I will 100% be buying lots and lots and lots of Bitcoin. I don't really care if it, does something like this where it goes into the green. Let's say it goes into the green and Bitcoin stays, relatively sideways and then crashes a little bit more. It's not that big of a deal to me because, once it's in the green, that's still such an amazingly good price. So I'm just waiting until it goes into the green. And if it goes into the green, this is just one other, indicator that I could use to buy Bitcoin. Then we have the R hodl ratio. Once again, love this one because there's the green, there's the red. Makes it super easy to understand. If it goes into the green, I'm going to be buying. If it goes to the red, I'm going to be selling. And it is, nowhere near either. It's, I guess it's closer to the green, which is good. But it is still quite a ways away, so I have some time to wait. And the fact that it is, further away sort of makes me more bearish because I want it to come down so that I could buy it, And it's like, if it comes all the way down, is it really going to go all the way back up? I don't know. It would look really weird if it goes all the way back up from here to me, which is why I'm definitely more bearish. Same thing with this. Like, it would just stop here. Like, here it did not stop in 2018. It did not stop. It went all the way down. Here actually, I guess 2013 it did actually come down to 0.53, and then make another rally. So who knows? You never know. But that's why I have all of these different indicators, this one and the R-Hodl ratio, and of course the Bitcoin rainbow chart. So this one has been really good on the, log chart, showing what, where to buy, where to sell. And so, of course, if it comes down into basically a fire sale, I'm selling everything I have, like all my, like my car, my real estate, my computers. I don't know. I'm going to sell everything. I'm going to sell everything and buy Bitcoin here. And if it hits the buy zone, I would be super, super interested in buying more Bitcoin as well, along with other altcoins, or along with altcoins. And, it's right now being in the still cheap category. Yeah, it's cheap. It's nice, but I don't really have my hopes up for like a really big rally. I really want it to come down. And then, of course, we have the Fear and Greed Index. And right now it's at 24. This is from 7 hours ago. So actually, looking at this, what I would like to do is look at and see if they updated it. Because, no, it is 24. So it's at 24. And then 24 was 19 hours ago. And 22 hours ago was 28. So it's gone down. Although, because the price dropped and then pumped back up, I'm sure the Fear and Greed Index has also pumped up a little bit. And for me, if it's under 15, that's an automatic buy for me, always. And if it's over 75, then I'll probably start scaling out, unless we start having a, full bull market or something. But yeah, 24 doesn't really, it's not low enough for me to really go in heavy, justify me going in heavy yet. So that is the Bitcoin Fear and Greed Index. And then we have the funding rates, and this is like, I don't really look at this, but it is you can make money if you short the market, which is, I guess, good. But these things could switch every hour. They could switch, or every 8 hours. They could switch. So really, you can't use this as a metrics on its own. It's just nice to know, like a little thing, nice to know. And now, so looking at the charts, we could see that the prices are, doing this stupid, really stupid dip and wash everyone out, liquidate everyone, and then rise back up. So a couple of my long positions did get wiped out right here, because those are trades, and this is just, how you have to trade. Normally, and this is what really, and I'll go to Bitcoin just to, show it. So this is what really got me right here, was that I understood that this was a liquidity zone. And this explanation just goes to show you how insanely difficult trading really is, right? Because normally what happens, and I'll show you this right here, just on a normal, normal chart. Normally price goes up, and then I wonder if there's a way, there has to be a way to be able to just use these. Give me 1 second here. Okay, cool. Figured out the shortcut. So what I was saying is that normally if there was, let's say there was something like this, and price was hitting this zone for a while, what you would see is that this right here is the obvious support, right? So underneath this support, this entire area, people will have their stops because they will long it at the support, and then they'll put their stops down here, because normally if it, comes down to like here, it comes back up and then just like falls all the way down, right? So that's normal. But what happens a lot of the times is that it'll fall down here, and then the market makers will basically take all of the people who had their stops right here, and they'll buy all of the stops, and then they will shoot the price up like that. Look familiar? Well, if we, go back, look at this. It basically support, and then some, even the support on the daily was right here as well. See? Boom, 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 boom. Touch. So lots of people had their stops right here, because if the price was to come down, the most, I want to say, probable scenario was that it would come back up and then fall back down, right? That would be the most probable scenario in this case. And what normally happens though, or what happens a lot of the times, is what this looks like, which is a wick, which is that it falls underneath the liquidity zone or underneath the support into the liquidity zone, just like this, and then wicks back up. However, this is the daily chart. Normally, this wick that happens where it falls underneath and then pops back up, normally this happens literally within a few seconds to under 4 hours. Sometimes it lasts a little bit longer than 4 hours, but very rarely does it last longer than 4 hours. This one, however, if we go to the 4-hour chart, you could see that it fell below and it closed down here. And not only did it close down here, but the next candle was an indecision doji candle. It showed absolutely nothing. And then the candle after that, it looked good. And then it is, I believe it's an inverted hammer, but so it's not terrible, but it did not shoot all the way back up. So we had 4, 8, 12 hours, nearly half a day underneath this huge support. And even entire 4 hours underneath here, and it didn't even come up to this support right here, the lowest support right away. It sort of just stayed underneath there. So the fact that it stayed underneath there was really bad, because obviously it's like, okay, the price tanked underneath the support. There's not a lot of buyers. The buyers are not stepping in. But then all of a sudden we got this gigantic wick, this gigantic candle to bring us back above the previous support. And that happens in trading. At first, what would happen in my journey is that I would, going back to this example right over here, is that we would have the support, and I would buy it at the support, and I would have my stop loss underneath the support, like not normal, but like a regular retail trader, right? And then I would continually get stopped out because it would wick underneath, stop me out, and then jump up, wick underneath, stop me out, jump me out. So finally, I learned to use stop loss timeouts, and I would wait until there was a close underneath here after 4 hours, almost nearly 5 hours. And then depending on the close and then the next candle is what I would do, right? So that is how I deal with the wicks. So I never actually get wicked out, but it looks like, I guess, I don't know, the market makers knew that they needed to do something a little bit different right here, and there was a lot of traders that got just annihilated. And there's also traders that bought here. There's a lot of traders that I'm sure bought here because they're like, oh, it's a liquidity zone, so they buy here, but then they exit their trade. If we go down to, say, like the 1 hour mark, they see, oh crap, this support area right here is being rejected. So they probably exit their trade right here, even if they bought down here. And that is what makes trading so difficult. It's being able to not just get your analysis right, but also your timing right. And you'll also notice how incredibly difficult this is to trade now, because look, the RSI, the stochastic RSI, the MACD, everything is in the overbought territory on the smaller time frame charts, but it's still moving up. So it's like, do you really want to bias if things are in the overbought territory when we're in, or at least in somewhat of a bear market? And do you want to buy, these wicks over here? It's like really, really hard to, definitely hard to trade right now. And so the only thing that I could really do at this point is basically do what I basically do every week and look at the long-term or bigger high time frame charts, and then try to do some analysis off of that. So that's what we're going to do. And I will, start off with the total market cap and then go down into the dominance levels and everything else. And we're going to get to that in a second. But right now, since we're done with the fundamental stuff, I'm going to save this. So give me 1 second. Okay, so now that we went through the fundamental indicators, we could start looking at the graph and looking at technical indicators. And what I like to do is start off with the total market cap, and every week I like to look at it and determine where we are. And what I really want to do now, because I overtraded the last couple months, what I would really love to do is to simply just take a step back, look at it from a 30,000 foot view, and try to get in and out of the market at very key levels that make a lot of sense to me. So this is what I put down last week, April 11th. You can see that right here. And I, have the 61.8 plotted out, and we're sort of just bouncing on it. So looking at this, I don't really like the way that we've just been bouncing up and down on the 61.8, and we went below it, went above it, went below it, went below it. Below, above, below, and now above. It's honestly seems like if we were going to get a bounce, we should have gotten a significant bounce. And so that does not give me too much confidence, although this is crypto, so you never know what could happen. But what I look at with the 61.8 is basically take the Fibonacci from the bottom, bring it to the top, and you can see that this is it right here. So, we bounced, then we fell below. The one thing that I do like about it, or actually looking at this now, I must have done it from here when I should have actually, now that I'm looking at it again, done it at least from here. So I do need to actually bring this down a little bit. Makes it a little bit more, accurate. So we have it right here, and it's so tough. It's so tough because I really want to buy it right when it hits it the first time, maybe when it hits it the second time, right here, a few days later. But then it hits it again, and then it hits it again, and then it goes up. So is it going to come back down? It's difficult to tell. I do like the RSI, how this is moving upwards. I do like the stochastic RSI, how that's moving upwards. I do like the MACD, how this is moving upwards as well. So we are getting pretty good indicators. We have 3 different indicators that are really good. And so it's really difficult to tell right now. But given the certain circumstances, I would say that right now is leaning more towards buying rather than selling, especially because we got the drop below and then the retest or the reclaim above. So I could definitely see, something where it comes down just a few percentage tomorrow or the next day, and then pumps back up, 4 to 5%. So that we get up to the 38.2, because actually, look at this from the top to the bottom. Actually, I need to go into the daily. If we go into the daily and we take the Fibonacci from this top to this bottom, we should see the 61.8 get hit. Okay, so we have not actually seen the 61.8 get hit. But this is the yearly open and close, and we actually ended up closing below that. So this is definitely the biggest area. So we got to the 50% and then dropped down, which really isn't really that good. Like first we got to 38.2, drop down, 38.2, drop down, 50%, drop down. It doesn't give me the most confidence in the market, to be honest. I mean, I like where we are. I could see us going higher, but it's like this down here, obviously at 1.5 is the main support area with all these wicks coming down here. And then right here is the main resistance with the yearly close / yearly open, plus obviously all the resistance that happened right here and back here, and support / resistance right here in this area and all the way back there. So this is clear resistance. This is some support. We are on support. We can see a bounce up. It's just, do you really want to do it? Do you want to take that risk? It's much easier. It's much less risky to long from down here as opposed to right here. That's all I'm saying. Maybe if we go into the other indicators, we could get a little bit of a better picture. I do, however, like the fact that we got a low, a higher low, or higher lows if you're just counting the bodies. And then another, this could essentially be a higher low. Although what I would do is I would take the bottom from the bottom to the top like this, and 1.713 would be where I would think. Normally under normal circumstances, I would not take it from down here. I would take it from right here. But I think that this is really only relative in bullish markets, and in bearish markets, you have to take it from the bottom, which means that we would fall back down. So this is a difficult Fibonacci to take, right? Because bearish, downtrend, you want to take it from down here. But so much support was right here, and this was only one day. This was one wick, and normally you don't take the Fibonacci from the wicks. You normally take it from here. So to be safe, this would be the level to take it from right here. And it's like a mix. It's not all the way down here. It's not all the way up here, but it's right here, and we did test it back here. So maybe even here would be another area to take it from. So I like how we're bouncing, but I don't. Usually, like I've mentioned before, it's like we come down to 61.8, and then we come back up. Or what we normally do is we come down to 38.2, do this, and then wick down to the 61.8, come back up to 38.2, wick back down to the 61.8, and then like come back up. This is like and then we go like this, and this is like a bullish market structure. This happens all the time in bull markets. So in bear markets, is it that we will come down, come back up to the 61.8 up here, and then fall, come back up, and then crash down? Well, whoops. Well, we didn't even get to, we did not even get to the 61.8, originally on the move up. So I don't know. It just doesn't seem bullish. It just doesn't really seem all that bullish to me. Today was the most bullish day out of all of the days. Today was the most bullish day with this candlestick, right? For sure. But that's why I'm taking some longs. I'm still in a couple longs. I'm not closing them out, and I did buy a little bit, so I'm in some positions. I'm just not going to go super heavy. Okay, so now we can move on to the total market cap of altcoins, basically everything except for Bitcoin, and it's pretty much the same thing. This does look bullish. It does look bullish. It's just it is in the very middle. It's in the middle of the support and the resistance. So it being right in the dead center middle, it's like, yeah, it's a good longing opportunity, or not really right in the middle, but at the 61.8, because if you take the Fibonacci from the bottom to the top, 61.8 is right there. So I like it. It's just I would much rather see 61.8 hit up to the 38.2 at least, and then fall back down. And I would I would rather wait until it hits the 61.8 and then starts moving up, and then set my short positions here, or I would wait, see it come up and then wait for it to start coming down, and then set my long positions here. So it's like, yeah, I have some long positions on, but I would have much rather have a long position on here and then gotten out right here and then just waited and then maybe put another long position on right here. But it's so weak. It's so weak, just bouncing from the 61.8 only up to the 50%, that there's not really that much follow through. So it's very difficult to gauge, for me personally, as a trader, these higher time frame charts right now. The only thing that I would say is that, the buy zone is down here. The actual buy zone where you're like, yeah, I'm definitely buying. This is a great deal, is down here. And then obviously the real sell zone is at the yearly open close, which is right here, which also coincides with a, swing failure pattern top, a lot of resistance, and right here, like throughout this entire run, plus this resistance up here. So I would definitely want to close out a lot of positions up here overall, across the board, like in my longer term investing account, like the stuff that I've been basically accumulating for like a long time. So we sort of got to wait, and it's like, damn, do you really want to miss out on like this entire run up? Because that could be huge. And it's like, not really. So that's why I have, this is exactly why I have my longer term investing account where I have, I keep on putting money into there. I keep on buying coins with it, small amounts at a time, just in case we get a run up. And I also have my trading account, which I'll, trade back and forth in all the time, which is great. And because I don't really have FOMO now because I have my account. I have cryptos in my longer term account just in case we do this. My trading account, not so much, no. But I'm not going to miss out on FOMO in case we do get a big rally. And in my trading account, I am long on a couple coins anyway. I think I'm long on Tezos right now, and obviously I'm long on Quant and a couple others I'll show you, later in this video. But it's just really worrisome that it didn't get, it had hardly any follow through. It's almost like a bouncing ball where it just fell and then bounced up here and then, bounced up here and then, fell and bounced up here. So like I would much rather have it fall and then bounce up high, and then fall again. It just seems like it's weak to me. So that's why I'm going in, but not so much. Okay, so next up we have dominance levels, and this is really odd. Prices went up, but altcoin dominance fell. Really weird. So if we take the Fibonacci from the bottom, right there, to the top right here. Is this the top? No, there's the top. There you go. You can see that the 61.8 is right here. And hold on a second. What is, oh, this one must be on the much higher time frame. Give me 1 second here. Yeah, this one is from the bottom. Actually, I want to make sure that I do it correct, that I have the correct one. Yeah, so from the bottom on the weekly to the top. Yeah, for the dominance levels for altcoins, I would love to see them, come down. Altcoin dominance come down. I don't really ever see it coming down significantly anymore, but I mean, can you imagine if it came down here? That would be like incredible. This is where we'd get the alt season, 100%. But I would be in before then, just because the way that the market is structured now, the way the VCs are coming in and big industries, and big money, comes in and buys up all these altcoins. Like I don't think we're gonna get down into these levels ever again, to be honest. But I do think that we will maybe come back down here as a possibility, which would align with this previous support and resistance level back there. And if this does happen, a lot of alts could fall, they could fall 90%. Alts could still fall 90% from where they are now. I know they already fell 80%. They could fall another 80%, 90%. A lot of them won't be here in a couple of years. It's totally possible. So you just really have to keep that in mind. And you can't, just buy the dip. Unless you, my plan is that when the coins do drop 50% or more, that's when I start to accumulate and put more money from my trading account into my investing account, like more longer term, right? So that is definitely a method to do. So I do that for coins that I really like, and I'll have another video on that. I do have videos in my past on that, but I'll explain more about that in a separate video. So anyway, getting back to this, you could see that the dominance level for altcoins is actually falling. Well, I mean, that's normal right there. So it's going down, and this also makes me not so bullish on alts. I would absolutely love to see 61.8 hit. I guess, yeah, I guess I put it right here, but honestly, I'm gonna take it from here because I think that this is more accurate, because you could see the 38.2 was hit, boom, came up to 23.8, and then the 50, was hit along with this, and then it came down, but it never quite hit the 61.8 yet. So it never hit the 61.8 yet, and like this is where I would want to get in, because look at this. Actually, no, there's no way that this is the 61.8. This is the 38.2, or this is the 23.6. Holy shit! Yeah. Altcoin dominance, is this just going to be the new norm now because so much money is flowing into alts and people don't, I guess, appreciate Bitcoin as much or something. I don't know. Like, I guess new altcoins are just being created more and more and more and more, that it might be possible that that dominance levels are going to become, like, altcoin versus Bitcoin dominance levels are going to become, I don't want to say useless, because if they do drop down to here, that would definitely be a buy. And I mean, shit, if they drop down to here, it's definitely a buy. Or even here, it's going to be a buy. But yeah, this is definitely something that I think it might be the case. I think it might be the case that altcoins will continue to exert dominance, have over 50% dominance against Bitcoin in the cryptocurrency market pretty much from now on. So when it comes to the dominance levels, ultimately, I would just really like to wait until they come down to the 61.8, because, I mean, this was major support back here, major resistance, and, you know, a little bit of support. So I would feel a lot more comfortable going into altcoins if they come down to this level, like if altcoin dominance comes down to this level. And then when it comes to Bitcoin dominance, you know, same thing, like 61.8 is right here. I would love to get into altcoins when the Bitcoin dominance reaches here. Otherwise, like, I'd rather be in Bitcoin, you know, for the most part, even though altcoins definitely outperform Bitcoin when the market goes up, and they also, you know, lose a lot more when Bitcoin goes down. So I'm still like risk off for the most part until we reach this level or we reach this level. And this hasn't been reached since January, you know? So it definitely is going to be a while until we reach here, because look, we're in the middle of support, resistance, and this is no man's land. And I guess it's easier to look at altcoin dominance and see what I'm talking about. But yeah, it's basically, this is the closest support I see. This is obviously the resistance, and I would much rather just wait. Like, this entire area right here is really a weird area to go into coins, in my opinion. It's good to go into coins at the bottom. It's good to get out of coins at the top, but going into coins, if you're like mostly in stables, like around this area, just, I don't know, it just seems like it's weird to me. So there's not much confluence when it comes to the dominance levels or the fundamentals, and fundamental indicators to like go super heavy or go into a lot of crypto right now. That's definitely it. Okay, so now we could actually start going into Bitcoin, Ethereum, and I'm just going to try to go through as many charts as I possibly can. If we look at Bitcoin, you can see that on the weekly chart, we made our high, and we had our basically swing failure pattern of this previous high right here, where it jumped above it and then fell back below it, and then came all the way back down. Really, when you get something like this, normally what you do is you target the previous lows, which are back here, which also coincides with the yearly open close at 28,939. Plus, this is the weekly 200 EMA. So I'm still really thinking that 29,000 is definitely in the books, and I am not thinking that we're gonna just like go to new all-time highs now. I am more under the impression that this was the yearly high, that this was the high for the year. If not, you know, for the year, maybe for the first, 3 quarters of the year, then maybe in the last quarter, in the final quarter, we'll, you know, get a jump up. But I think overall, it's like higher high, and then a lower high, and then a lower high, right? So that's basically what I'm seeing here. Obviously, this high, you could say that we got a high, a lower high, a lower high, and now a higher high. That's definitely possible. So there's definitely two different schools of thought, whether or not we are in a bull market or whether or not we are in a bear market. And if you take one of the actual things, let me find it, this parallel channel here, and you go from the bottom right to the top, it does look like we are in a channel. I mean, we are in a channel, but you know what this also looks like? This looks like a bear flag, and bear flags usually, you know, go to the downside. So I don't really expect this to come all the way back up to 50,000. I'm still pretty bearish, and trying to just preserve capital. And I don't know. I just think that it's better to be more cautionary now than, not. And if we go down into the daily, you can see that we bounced off of this level here once, twice, and now we bounced off of it a third time. Also, if you're taking the bodies, we bounced here, and then here, 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 and then now we bounced off again. So the bulls definitely hold up this trend line really well, although we did actually fall underneath of it right there as well on the 2-day, on the 2-day. Let's go down to the actual daily. So on the daily, looked something like this, and then on the 4-hour, it looked something like that, right? It looked like this. So we had the lows coming in right here, and then we obviously fell below, retested, cracked down, looked terrible. So then I bet there was a lot of people who shorted the market right here. So I'm pretty sure all of this are the short sellers that are, having to, buy up right now. But if we take a look at the actual daily chart, then what I think is a much more probable scenario than simply reversing from right here would be to look at the horizontal, because you could see that 37,500 area, we had a lot of horizontal taps to that area right there for support. So just like how right now what we did was we fell below the support, and then everyone got stopped out basically, and then it shot up because this was a liquidity zone. I think that if you look at the daily, the higher time frame, it's much more prevalent, and that this area is the liquidity zone because everyone's going to be longing 37,500 because we kept on bouncing off of it all back here, and there's going to be a lot of people who have their stops somewhere below that area, like right around here, right around this area. So this to me is the biggest liquidity zone, and this is where I would want to long. I feel like the probabilities of longing from 36,800 are way better than longing from here. Obviously, you could argue that we're gonna go all the way back up and just shoot all the way back up to 50,000, but I think that this high was the high, and that we will come up to maybe around 44,000, maybe the max right around here, 44,500. I don't even really see that, but I could see definitely the midline 43,900, or maybe even a little bit higher at 44,100, just somewhere around this area before falling back down and falling out of this bear flag. And actually this would have to be, we can make this a little bit more, I'm sure we can make this a little bit more accurate if we somehow bring this up like that. Yeah, so even if we bring it up so that we get the tap right here, maybe if I want to have as many touches as humanly possible. That's the goal, right? So this is a little bit too much. Let me see if I could adjust this really quickly. And yeah, it looks like this is the way that has the most taps on both the top and the bottom. So yeah, around 44,400, 44,500. That's where I would want to take my profits. And honestly, I see people saying 42K, but I don't really see it going down and then coming up and barting and then going sideways and then coming back down. I could see it coming up a little bit higher than that. So I'm going to be taking my profits at 44K and then hopefully buying back in around 36,800. That's pretty much my game plan for Bitcoin. I am in a long position, but I'm it's not from down here, it's from up here, and it's from right around here. So I would love to be able to just get out for a small gain. Yeah, and I mean, another reason why I'm not super confident is because when you get I mean, I guess right here it's the same way, and right here it's the same way. It's just the fact that we consolidate, by support is just so weird, because normally, look at this. This is resistance, right? You could tell so easily that this is resistance because it moves up, boom, 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 and it moves down. It immediately moves down, right? And then it comes back up for one little pump up, and then boom, falls all the way back down. Same thing for this resistance. It pumps all the way up, and then boom, falls all the way back down. Even this one, it comes all the way up, and then like immediately goes down, and then it consolidates a little bit underneath after it falls, and then falls back down, right? But like, look at the supports. It fell, and then it like came up, it came back down to the support, came up, came back down to the support, came up, came back down to the support. That's really weird. It does not just, it should just fall and then pop up like immediately, which is another, I guess it's another indication that we're not in a bull market, because this just came up one and then came up, made a higher high, and then immediately fell down. But this one made the low, came up, came back down, came up, came back down, made an even lower low, came back up. So it's like it's spending 11 from the 11th to the 18th, 19th, all the way down by the support zone. If it was super bullish, like normally when things are bullish, you buy it and it just zooms up, right? It doesn't just consolidate by support. So that's why I think that this is pretty weak, and I'm not convinced that we're going to be seeing any greater than 44K. Also, we have this, 200 daily exponential moving average right here. We have the 200 daily moving average right here. I don't know. You can't really convince me. Yeah, and so that was Bitcoin. So now that we got Bitcoin, we can move on to Ethereum. And so if we move to Ethereum and you take the Fibonacci from the top to the bottom, you see that we reached the 61.8, and then we came down to 38.2, and now we're bouncing up from there. And if you take the Fibonacci from the bottom to the top, I wonder what this is. Okay, so this is a 38.2 from the bottom to the top as well. So for me, if you take the Fibonacci from the bottom to the top, what's the most ideal scenario is right here, because that's the 61.8 plus, it looks like, I guess this should be a little bit more like this, and this makes a little bit more sense. But actually, I guess you can't really do that, because they're if it comes down here, well, unless it comes down here and then this is the liquidity zone, so then people, the market makers dump it into here. But it's not really, because horizontal is much better than diagonal. So I'm just going to scratch that off and say this right here, between here and here, this is the support. This area is the support. So this right here to me is the longing area, because this would be the liquidity zone of here. Just like how we just saw, a wick down into the liquidity zone right there, and then it shot up. I think the same thing will happen down here. Well, where the price, let's say the price comes up like this and then comes back down, something like that. And then maybe it'll bounce like there, and then it'll come down and do something like that. I'm really hoping it does something like that. That would be pretty awesome. The other thing that I noticed is that if you take the Fibonacci from the bottom of this, rally up here to the top, it come down to the 61.8 and then jumped up to the 38.2, and usually, comes down here, pumps up here, and then falls back down, consolidates, and then falls even lower. So yeah, this entire area, like this is the low, right? So this whole area right around 2,400 to 2,500, this is the area that I would really want to be longing. All right, so now I'm looking at Ethereum against Bitcoin, and the first thing that I do is just, plot out the major supports, which I see are down here, and the major resistance, which is this entire area up above here. So we are getting really close to a big major resistance on the weekly chart against Ethereum against Bitcoin, on Ethereum against Bitcoin. And also the RSI really doesn't look that good against it. The MACD looks fine, but I would not, it's just more time to, or more reasons to be cautious. If we do get a pump, which, like I said, I am hoping that we do get a little bit of a pump over the next couple days, after giving this reclaim of the support, this wick and then reclaim. I do hope that Ethereum pumps up to the weekly close, and that Ethereum gets to be, 3140 area, like right around 3140. That would be just an excellent area to take profits. I'm a little worried. I hope that we don't just dump tomorrow, But I do think that 3140 is, is a fine area to take profits for Ethereum. Hopefully we'll pump up even higher. I don't know if we will, but that's what I'm thinking. And then also against Bitcoin, if Ethereum reaches this level, then I will, take my profits for Ethereum no matter what price it is. USD against USD, I'll just take it, right then and there. And then I also use Ethereum against Bitcoin to gauge my entire analysis of the entire market. So if Ethereum against Bitcoin jumps up even higher and reaches here, then I'm gonna definitely sell a lot of what's in my investment portfolio here, and just a lot of what I have stored away in my cryptocurrency, the cryptos that I've bought over time that I'm holding on to, right? And I'll try to buy them lower. So that's definitely what I plan on doing for ETH against BTC. Let's just see if you plot out the Fibonacci if anything happens. So from here to here, weekly close. Did I actually put that on? No, I didn't put that on this one either. So yeah, if you take the Fibonacci like how I did from the top to the bottom, and you could see that the 61.8 is very close to the weekly close. And I guess you could say this is where the Fibonacci should be. You can't really tell because we haven't really reached the exact levels. The only other thing is this. I mean, this is a possibility, because sometimes we get the overextension and then you have to take it from the second one to the bottom. 61.8, hit the 61.8 and fell down, and we're consolidating. Also, the 38.2 was hit here. So this looks like the most obvious type of Fibonacci. So I'm really hoping we maybe get one pump up, fingers crossed, just a couple percent, and then I could get out of my positions. So yeah, that's what I'm doing for ETH BTC and just ETH in general. Okay, so now that we went through Bitcoin and Ethereum, what I want to do now is go over other coins that I like, coins that I'm interested in, and also coins that have been doing really well. You see, in 2018 and 2019, more specifically, there were a few coins that were doing very, very well, even though there was a bear market overall and a lot of coins were going down. This included Link. And I remember I made a mistake that I sold Link off and I didn't buy it back because it was a bear market, right? And everything was going down, but Link still went up. And then the other thing, I believe that actually also happened with Quant Network. While a lot of prices were going down as well, Quant seemed to keep on going up. And I ended up selling some of my Quants and regretting it because Quant just continued going up, even though the overall market was going down at the time. And so I'm going to look at a couple coins, two in particular. One is Near Protocol, and the other is Luna. Because if you take a look at the chart for Near Protocol, you could see that it started in October of 2020. So it started pretty much at the start of the bull run, and it has consistently made higher highs and higher lows, just continually doing that. The only time, yes, in January, it did fall off, which means that it went up in December while the entire market was falling. Because remember, the entire market fell, most of the market fell in November, early to mid-November. And yet Near Protocol continued to go up. And then it had this huge crash, right? And now it's back up, and it's really only 15% below its all-time highs, which is quite astonishing. So this is definitely something that I'm looking at, and I'm thinking to myself, I want to have some of this. So looking at the chart right now, you can see that, there's the top here, and then it fell down, and then there's the top here. And I guess if we go to the weekly, you can see the top was right here, and we had this, and then now we had the top right here, and there's still, the RSI swung back upwards, quite astonishing. And I bet if we took the Fibonacci from the bottom to the top, it pretty much hit the 61.8 before coming all the way up. And this is bullish. The fact it came all the way back up, nearly the entirety of the move. So I want to have near. I want to, have allocations in near. So if it comes back down to the 61.8 of this move, I would definitely want to grab some. So I would definitely buy some near at $12, and I'd say $12.48. That looks like a really good number. It'll front run the 61.8 just a little bit. And yeah, I would just buy it and I would just hold it here. And then if it happens to come down here, I would double or triple my position, because this is such a significant level that that's something that I would do for sure for near protocol, because I think it will do very well. And this is just near against USD, right? Look at near against Bitcoin. If you put your money, into near protocol, you would have outperformed Bitcoin by over 600%. In fact, if you would have done it, in December, I guess January, you would have outperformed Bitcoin by nearly 10x. So you could have 10x'd your Bitcoin amount, the amount of Bitcoin that you own, if you would have just put it into near. Of course, who the heck knew what near was doing? I sure as hell didn't. But look at this again, from the bottom to the top, 61.8. Before, zooming upwards, I would have sold right here back into Bitcoin, but it just went on an absolute tear. And so I would like to get near protocol in between the EMAs, as it likes to fall in between the EMAs before jumping up, or, a little bit below it. That's fine. But yeah, I'm not sure if I would necessarily do this now, but I do like how it went above the opening price on the exchanges. So I have my order for USD against USD, right? But how about against Bitcoin? Because you want to have it against USD and against Bitcoin. So if it happens to come down, to this level right here against Bitcoin, then I'm definitely going to want to be buying. Definitely want to buy some near protocol as well. So if it either comes down here against Bitcoin or comes here against USD, near is a buy for me. Okay, the next one is Luna, and I'm going to start off on the monthly chart. And what I notice is that it sort of looks like it's a five-wave structure up, where it did this. Right? So if you take the Fibonacci from the bottom to the top, the 61.8 is $45.82. So I would 1,000,000% want to buy a lot of Luna right around $46 to $48. I'd probably want to get in earlier, but I'm just gonna put it there. So if it comes down to $48, that's an absolute 100,000% buy for me, right? For Luna. Also, there's all of this other confluence back here as well. So I'd love to see Luna down there. I don't even think it'll reach the $26, $27 that I previously had panned out on here, or put on here. So that's number one. If it comes down here, I'll absolutely buy at 48. The other one is that so it came down. Okay, sorry. So the next thing that I do is look at this last wave, and bottom to the top, 61.8. So if it comes down to $72.86 then that's where I will buy, and I will try to sell it at around 89. I'd probably sell it at $87, $87 to $88 if it does reach here, in hopes that it would be something where it would go down to the 61.8, come up, and then fall down to here. That would be the most ideal thing. So that's the second thing that I want to say. If it does come down to $73, I'm buying. And then the last thing is that if it comes up to $97 to $99, I actually want to sell it and try shorting it. But that would be going against the overall trend of Luna, because as you could see, the trend is just, well, recently the trend has been sideways. This looks a little bit like Bitcoin, to be honest. Remember when Bitcoin hit 64,000 and then it hit 69,000? Looks very, very, very similar, but you know, I will. It still is in an uptrend, so I don't want to necessarily put a lot of money in it to counter end, but I will put this short on with a very small position just to do it. And typically I would take my profit here, but since I am really like, honestly, I'm trying to like get the gains and not take, I want to risk less. Basically, I want to try to make sure that I just get my profits, like, and I secure my bag. I'll put my target down. I'll put my target here, just in case. So I'll have this be my trade setup if it continues to pump, and that way it would pump up to the just about the 50% of the retrace, maybe even the 61.8. This entire zone up here is a red zone. Like, it could easily come anywhere between 95 and maybe $109, something like that. But I will simply wait until it either hits here to short it, or I'll wait until it hits here and I'll long it. And then if it hits here, I'll long a lot more. So yeah, that's my plan for Luna. And if you look at the Bitcoin chart, or Luna against Bitcoin, it went up 70 times however much Bitcoin went up. Bitcoin went from what, like 6K to 60K or whatever. So like 10x. This did 70 times that. So Luna went up like 700x against Bitcoin, which is, 700x USD. So what I'm gonna do is I'm gonna plot out this chart. I'm gonna do this chart real quick, and I will be right back. All right, so that was Near and Luna, and the next one, I guess I'll go over just like a couple more, and then I'm gonna make sure that I get this video out because it's already 1:30 in the morning. So next one I just want to go over is Quants. Basically, I sold up here and I bought back at 123. So I'm going to try to sell the Quant that I bought back at 123. I'm going to try to sell that, for break even. And hopefully we get, a pump up there. That would be awesome if that happens. And then maybe, it drops back down. It's really unfortunate that Quant has just been absolutely terrible since September, October, November. See, November is when the market really crashed, but Quant just was tanking well before then. Really disappointed because I just know how good it is. I just love it so much. But it is what it is. So there's that. And then there's also, other coins like Mana, and I like Sand because I think the metaverse is going to do really well. So I want to get some Sand. And, there's just a bunch of coins. But, I like ApeCoin. I think ApeCoin just averaging into ApeCoin could do really, really well. Also, I guess the last thing I'll say is I think Dogecoin, it is still a play. I think like averaging a small amount into Dogecoin is a play because Elon Musk is always has something up his sleeve. There's always some crazy stuff, something that happens with Elon and Twitter and all this stuff, right? So I'm sure if Elon, I bet if Elon takes over Twitter, he's going to make Dogecoin like the tip jar or something like that when it comes to like tips in Twitter. You could tip in Doge. I would say that he would definitely do something like that. So I am gonna, just accumulate a little bit of Doge. Might as well. Anyway, there's all of that, and obviously I also think that ApeCoin has a lot of potential for ApeCoin. So with saying all that, I think I'm going to log out now, and I will try to go through as many coins as I can once I get this video up, and I don't know, just give more updates. The other thing that I'm doing right now is I'm doing a lot of fundamental analysis, and I'm doing a lot of research and like trying to make videos and like really just setting up the whole my entire company really in terms of the videos that I'm putting out, and how I'm structuring the system of putting videos out, creating fundamental analysis. So I'll have Mondays be my market analysis. I want Fridays or Wednesdays, Thursday, Fridays, one of those days to be fundamental analysis on different cryptocurrencies. I'm going to start going through, and what I really want to start doing actually is going through every coin on CoinGecko or CoinMarketCap and just going through them one by one and doing analysis on them, and not just technical analysis, but I mean fundamental analysis to sort of create that type of portfolio. So I am working on that, and with saying that, I'll see y'all in the next video. So keep on stacking those sats, keep on making those gains, and I'll see you soon. Later.